Hi there, coming to you from Traders Community. We got Madavi and the mate here. What an eventful day, weekend on the markets. Blood on the streets this morning. They scratched that up, and we had quite a bounce, and it actually came in a few parts. It looked like it was going green, fell down again, then finished up. And much to do if you saw our preview, if you like, of last night and through the week. So a lot of those levels got attacked and then regained. So a lot of psychological elements in it. Not sure if that was the capitulation or not. My buddy here, Madavi, called it once it started bouncing. He said, "We go green today." And I go, it's going to be a big effort, mate. Hey, so great call. As far as that goes, and it wasn't just we saw it technically, saw the order flow coming through, and the big thing we saw coming from the option pits. Well, it's not really a pit anymore, but the way Vol was reacting, in a sense. So quite a day we saw across the risk assets. Believe it or not, things like the Bitcoin gave us a good indication when that turned around. That's your ultimate speculative. So it wasn't really a buy the dip. As we opined last night, the thing to watch for was when the big shorts. Remember, the smart money was selling this not in the hole. They were selling it from the top and last year, and we basically said that what was happening, and people did laugh at us, but we weren't mucking around, that they were printing this market at December 31 for their bonuses. And as far as the Fed goes, they signal what was happening before Christmas at their last Fed meeting. Those that just always think it goes up and were spinning their stories blame the minutes. Well, and since then, we saw it. The second wave of selling basically came on that 20-year bond, when all of a sudden they were buying bonds instead of stocks, right? So all that happened. Today, very low liquid. You could see that with the VIX and other things. So quite a good day, technically, if you want to go through that. So let's go through the SPOOs first, and then we'll go through the Russell and the Nasdaq. So we look at the SPOOs on the 5 minutes. We're going to go to the opposite of what we normally do. We saw it just sell off all day. Right, sold off all day. And then down here at OH, we saw the Cajun and the Tenkan here, but the Chicow started to give us a good signal. We had positive divergence here on volume. And then once it accelerated through here, this was your first attempt, if we just follow it through, and we actually sold off hard here. So classic ABC, right down to 3/8. You can see 3/8. And this is the bit where Madavi, that you were dead right on here. We traded this up and down. He actually just held his longs on the Russell from memory. And look how we closed up. So a perfect measured move on the 5 minute. If we want to look at that on the Russell, which I'm going to go straight to, mate, this is the one you were really bullish on, because it had basically, you see this positive divergence while the others were still selling, and you recognize that factor there. Do you want to talk us through the Russell, mate?
Well, my thing is, I think we've been in a bear market, especially in the Russell. And in the biggest moves ever from point movers has been in a bear market. This kind of takes me to think the same. So when I saw this, I was like, hey, this is going to be one of these another bear market rallies, especially with the Russell since down over 20%. So that's the biggest sell-off there. But I think the selling's going to continue. This is just a bear market rally, in my opinion.
Right, and an important thing is they are the most vicious rallies. So
the biggest turnaround points have been bear markets.
Right. And important. And so this one settled it different because the market is so bearish for people that, but they're not bearish. They're bearish because they're confused. A lot of these people, A, haven't seen a bear market. B, all of a sudden they're experts and they're getting blown apart, so they don't really know what to do. The pros came in, like we said, and that's why we use what we do to measure it and took it up. And they're the market makers, right? So don't forget that. In times of bad liquidity, they're the guys making the market. And you can see that in options. And as I've said many times, stick to the liquidity if you're a trader. Investing's... a lot of people's investments basically come from being bad trades, right? So let's have a quick look at Nasdaq, the 30-minute there. So this has been the weakest. And again, they're just being technically beautiful. 08s and minus 2.8. This is an 08. This 30 minutes. And you saw... So this here, this is that sell-off. We just looked at the SPOOs that came down to the Tenkan. They're all hitting support and Murray confluence, which is what we look for. We count out the waves. We keep it real simple. Okay, let's look at oil real quick. Oil sold off with them, which confused a lot of people because they're like, why isn't this up because of Ukraine or whatever, you know, or other areas or short supply. At the end of the day, the speculators get in these things and they become risk assets. And then that actually took over and you can see it bounced $2 off its low. And again, look at where it was, minus 2.8, previous low, gets up above it. See, that's where it actually became a buy. Natty gas, it's all about weather, remember. Oh, sorry, that's Nasdaq. Natty gas. So we saw the weather overnight. It was colder, as it is, and then it sells off on these weather models, and also all the optionality into it. So that's just a brief overview. Now let's go through where we are. So here's the S&P. What a bloody bounce, mate. So we talked about this, and I think we even put it on Twitter. It went under the 200. We look at the 50. That's what's our decision. We don't fiddle around just trying to find something. It got under it, came under it on the weekly, and we closed above it. Now, we're just Monday, and we got a Fed to come, and we'll go through that a little bit later. We've got some good charts from Bloomberg and people we'll share. And look what we did. And we almost got the kiss of death. Very close. So it's important what it does tomorrow and the next day, as far as that goes. Let's go to daily. Daily, look at that hammer. So 1, 2, 3. This is either a C wave, where we're going to go back to new highs, or as Madavi said, a bear market rally, which means 2. This fills a 4 and does 5 waves lower. So just keep it simple. I think we looked at the 240, didn't we? Oh, the 240, this is the one that got real. This is where I'm like, man, this is going to be a big ask. See, look, but because it got down here all the way to minus 5.8, which means it recalcs under other systems. But here we go. It was so far from the Chicow, and that was a little bit lower because it turned up. But look at that powerful move. That's 1, 2, 3, 4, 5 squares. And we closed right at the Cajun. So we closed right at resistance. Okay, let's look at the Rusty. Where's that one with the Rusty on the weekly that we look at? Is that on this one, I think, mate, right? So to get really, this is how far, it was quite a bounce today, but look at how far we are from that 2110, which is the breakdown level. Today was a psychological level, the 2000, and don't underestimate those. They're also big open interest levels or gamma levels. And you can bet there was a lot of vol sold today with these higher vol today. What did it get to? VIX, like 38 or something? Do you remember seeing that? Something.
No.
It was right up there though, eh? So so that made it hard. So an important thing is we traded puts, but the important thing is when it bounces, you have to buy those puts back pretty quick if you're a trader because the vol's so expensive. Just think about it logically or easily. Think about vol as you're borrowing at 38%, right? So, That's a big cost you have to overcome. So momentum has to be maintained. And that's why a lot of the market makers, they sell vol down there and trade it that way. Anyway, so let's get back on Rusty, the trade you did. So that's your weekly 60 minutes can show what we're talking about the best. If you look at this chart, again, minus 2H right to the cloud. This is classic technical stuff, okay? It's violent. It's not easy. So you don't need to go really big positions. But you don't need big positions, remember that. And the Nasdaq we'll look at real quick. Not sure where Metaboy is, but so look at Nasdaq came down, and our checkmate, this was his target. Remember Madavi on Friday? Came right to it, this breakup level. Just inside the cloud, that's 7/8 from this over plus 2/8, right? And we closed over this breakdown level here. So a lot of algos, they sell these breaks, so you know the market gets short here, and a lot of people are reactionary, right? So again, this can be a B, C. This is either 1, 2, 3, which means 4, 5 a lot lower, or it's the correction. So you don't get overly bearish and don't get over bullish. Like the people who are so in touch with how we've talked about this ad nauseum, how they just bought and never took losses and just average. Well, I'll give you the tip. A lot of them are gone. So 240, you can see it, the same thing that we just saw in Russell, right to that. Okay, let's look at your beauty. Didn't look at it today, but let's have a look at gold. So gold this morning. So we've talked about this a little bit. Bonds and gold and the Swiss franc have gone back to being safe havens. So gold is just slowly creaking up. It's in this big pennant trying to do something. It needs to do something soon, break up or down at an aggressive pace to keep that going. I just want to look at copper today. Copper's still in that pennant. Okay, so let's go back to oil. Should we look at oil? Here's our oil. So we're all pretty familiar with what this is. This is either the completion of 5 waves up or 5 waves of a third, right? Pretty simple stuff. We got ABC. We came right back and closed at the Tenkan. So basically, we're either topped out. This is your 3, this is your 5, or this is the first wave up of a bigger trend, right? So we're correcting that. Pretty clinical stuff. Look at your herd. That's your daily. Our weekly is this. It's even more. You can see it plus 2.8. That's why we shorted it off that. And we're testing this high. Natural gas. One of Madavi's favourite ones to trade, right, mate?
Mm-hmm. Yep.
And we close right at the 50. You can see what it's doing, right? Just building this little pen at this face. So this is either one. I mean, it can't really go much lower to be bullish. So more than likely, this is so bullish is C, 1, 2, 3 of a big wave. Bearish is this was the 5, and this is the 4th to go lower of that 5, like 5. So 1, 2, 3, down like that. That's your natural gas. Pretty easy. Should we wait for the great Johnny?
Cool.
Well, let's see. I think he's gone walkabout. He forgot he's Italian. Thinks he's in the outback right now. Here we go. So here was, we want to look at an hourly here on Natty. Bitcoin. So we had that big sell. It broke up and couldn't get on, so it was a failed bounce. It's pretty messy, but you can see what it got. What did it get down to? 32,800. It bounced $4,000 off its low today. And guess what? This actually helped the stock market get going, the speculative assets, because the algos kick in, right? So they're watching this. This is your alpha male of speculation, for want of a better word. Like, not a lot of thinking, just reactionary. And let's have a look at Ethereum. Probably did the same thing, right? So there's Ethereum on a weekly, got back inside that cloud, and that's 3/8 there. Off 3/8, that's a full 8/8 move. And look at Bitcoin weekly, same sort of bounce there, green. You can see 1, 2, 3, 4. So that's 5 waves. This is either first wave complete or it's trying to do an A, right? And it looks like we're just back at the bottom of the cloud. So that pretty well covers those markets here. Let's look at our other system here. Let's look at some of these crazy stocks, mate. This one's Tesla on this other system we have. So this is Tesla on a daily. So someone wanted us to look at this today. So Tesla today, if you want it 1, 2, 3, 1, 2, 3, 1, 2, 3, it's doing all this churning in 3 waves. This is algo heaven. They love this stuff, these machines, right? This is, where did Elon sell? Up here? Do you remember where? It was up here, right? And so the market ignored it and took it up higher. So you can see that there. These are your speculative things. We got as low as 8.35 today, Madavi. Look at that.
Oh,
8.50, it looks like, 8.50. And we bounced all the way up at 9.23. So there's still a gap down, so it's still down today. So today, where did it close at? 9.30, almost at its high, after it got as low as 8.51. What's another small cap? I mean, this sort of stock you want to look at. Apple?
well, IBM had earnings today.
Oh, it's a good IBM. So IBM had earnings. So this is on daily. We'll make it short term so we can look at what it's actually doing. So we're trading around 128. Is that right? I thought it was higher. So IBM, one of the probably crappiest stocks out there. ABC, it's basically up because of stock buybacks. We came up. See, we didn't even get to a new high here. While the Dow, it's still in the Dow, isn't it? And the S&P. So we came down on today's selling all the way to under 124. Now we're trading 128. Is that? Let me have a look at if this is updating. This is that other system. Yeah, so here's after hours, right? So on earnings. Where did this actually close at? Do you remember?
No.
This is probably the close here. So it looks like it spiked up to 138.40. And then after hours, we're now trading 135. You traded this after hours. Did they beat earnings or not? You traded the earnings. Do you want to walk me through
they
this?
beat earnings. I think I bought it at like 134, I think. And I got 137.
Nice. So you did this trade.
Yeah.
Let's make that a little bit. There you go. So that's what we did with earnings after the market, this dark blue thing. So look at that. So it closed and bounced up, wow, $6, is that correct? And then pulled back.
They went to close $7, $8.
Right, and then, so from a technical point of view, so this is all Johnny hindsight because I didn't trade it, but we came in at 08s, we closed here at 28s, and then we bounced all the way up to 88s. So that's pretty well way to profit. Nice trade. And we're bouncing little ABC. Who else? Who else had earnings today?
I don't know.
Wasn't there someone else big? Can't remember. We do have them there on the website somewhere. So let's look at the old faithfuls, because Apple also led this market up today. So here's the thing with Apple and Microsoft. That's pretty well your Nasdaq. There's obviously other ones, but they're the ones that most of the market makers in. There's obviously Amazon and Google and stuff like that. So Apple today, this is one of my better trades, just quietly. So go down to 154.70, bounced hard, See this? ABC in 1. That's your first wave up. That's 5. Down in AB, and then we closed here. So the question is, just as everything we've looked at, is this an ABC? Or are we going to build in 4 and 5, or is this as a 1, 2? Just keep it that simple, people, when you're doing this. Which all we do is we really try to keep it, dumb it down for us. You know, we're just a couple of old jocks, really, aren't we, mate? So we got to keep it simple. Where is that? Where is that one on here? So I'm still getting used to this one. Oh, there it is, parallel channel. So this is another one we like to use. And look how this worked today. So that gives you a good idea of the range for tomorrow. If it stays in this range, right, it can work its way up. So that's Apple. So again, look what it did, -1.8. So once you're getting in this oversold territory, you need other confirmation. So as under Chico, really, this was kind of acceleration. The safe buy of this was the 1, 2 when it got back in the cloud. See that? What's the other? What's that other stock Johnny was trading? Yep. So the SMHs, which is a semiconductor ETF. So this is another good indication because the stocks are obviously hot. The SMH is a good way to look at what Nvidia is doing, AMD is doing, and the rest of it. Look at the volume at the close on this, right? So that's the low. So you can see a lot of work was done at the close. So that was this was our margin call trade in here. You know how they get given their margin call. We got the sell-off, and that's why these became a buy. Because the selling had been done, and then that squeeze and momentum started taking everything up. So it will be interesting to see what this does tomorrow. So that's pretty well a quick view of the market. Let's go through some of the numbers, and then we'll talk about the Fed real quick. That's the one I'm looking for. So let's go back to the SPOOs and the 5 minutes so we can watch it live as we go through this. So quite the bounce there, right? 0.8 all the way to plus 2.8. So it gives you an idea how measured moves work. Let me just find this real quick. We'll go through. So our big day is obviously Wednesday, right? So the Fed meeting starts tomorrow. It's a 2-day meeting. Just to go through, we were down quite markedly today, and the Nasdaq, the Dow, and the S&P all finished green. Nasdaq up by 86, 99 the Dow, and S&P 500 12. So we have, from the negative point of view, we obviously have the Federal Reserve. Geopolitical view, we have what's going on in the Ukraine and Russia. We also had poor data out of the US today. The PMI was weak. And so Powell has to take all this into account. Right? He's got to work out, is this really transitory? Because remember, both he and Brainard in their hearing made a very big point of most of the inflation is supply, and they can't control it. The other big bit is energy. They can't control it. That's a lot to do with US policy, shutting down oil supply, ESG policy in other countries. OPEC tightened it to protect their thing. Now you got geopolitical concerns with Russia, which is one of the big oil producers of the world. Then Canada's another one. You have cold weather, and Texas. Also, we have the issues here with what we were allowed to do and weren't allowed to do. So you have that. VIX finished up at 29.90. I'm pretty sure we saw it definitely went over 35. I got a feeling it went higher. I could be wrong. Can't say I had eyes on it. As far as stocks go, the big story was Kohl's. There's a story on the website. KSS. That has an unsolicited takeover price, so that's up 35% for $64 a share. It closed at 63.70 right on the button. That's different to that Activision one, isn't it? Remember that never got up there from the Microsoft one. So that's pretty well. The bond market was, as I said, across the curve. Let's have a quick little look where that all closed for us. So interest rates also affect the dollar, don't forget. That's your big thing in your forwards versus that. So at the start of the day, the long bond was a strengthen because we saw safe haven buying. And then by the end of the day, we saw, if I look at the yields, we were across. We actually saw it flip where yields were lower. The 2-year was back under 1, closed at 0.97. And the 5-year was down 3 basis points. That's 1.5. But we saw the long bond flip back down, i.e. yields up to back over 2.08%. As far as geopolitics, we also have the election going on in Italy. They had their first run today. There was no final decision. Current Prime Minister and ex-ECB, Draghi, is favoured. Berlusconi dropped out. That's about it, really, other than the Ukraine. So let's have a look at where did I put that? Where did I put that, mate? On the Fed. Okay, so the feeling is it's a question of, as far as central banks go, the big one is going to be the Federal Reserve. We also have the Bank of Canada out. So the Fed's out on Wednesday. When's the Bank of Canada out? Do you remember? Can't really remember. Can't remember if that's Tuesday or Thursday. But anyway, we got a bunch of other ones. But we're concerned with the Fed, so I'm trying to find their... Anyway, so this week, the main thing the Fed's looking at is labour costs. Things they can control, right? They can't control supply. So what we do know, and they can't control energy. And they can't control the White House with their decision-making. So what can they control? So wage costs are one of them. But they've got to weigh up the political side of it. If they go... So here, they're kind of damned if they do, damned if they don't, aren't they? If they raise interest rates too fast, then it all goes hell in a handbasket. If they don't raise them at all, then the markets and Biden's actually come out and said, yeah, they should raise. So obviously they got to do something. The question, so it probably is 3 rate hikes is probably the right amount to keep a balance on that, right? So it then comes down to, okay, how fast do they turn off the taps? So remember, they got to turn off their taps, the free money, whatever you want to call it, before they raise rates. So that's why March, so we're January, that's why March is considered when they finish the taper and start raising. So keep an eye on that CME tool we put out there. Is that a 0.5% or 1/4%? What's your thoughts, Madavi? What they're going to do?
Well, I think they're going to raise interest rates, right? I think they're going to
they're definitely going to raise. But do you think the first one's going to be a 1/4 or a 1/2 in March?
I think they're going to do a 1/4 and maybe a 1/2 the next time, depending on where the markets are at.
Yeah, so the markets is definitely one consideration because a lot of them out. So I think a lot of people forget part of the whole rationale in 2008 of Bernanke pump priming or saving the market was his big thing on sentiment. What they don't want is sentiment to get... And I'm not talking about the stock market. I'm talking about the economy. They don't want the man in the street to be so depressed that they lose... And the businesses, that they stop hiring, they fire people, they stop buying. So what point is that at? That we know already that they're hurting. So it's nice for those with money to say raise interest rates to stop inflation when people already can't pay rent because real wages are low, can't pay rent, can't put fuel in their car, can't pay for heating, food's up, etc. Right, so they got to balance that out. So that's the difficult they got. They got a government that's shown how's a nice way I say, mate, a pretty good lack of being competent, right, to deal with that, and one to ready to blame everyone. Well, at the end of the day, you can only blame so much. You got to act. So Powell, all of a sudden, I mean, I don't know how he does his job, really, to be honest, mate. But I think and I think that's the rational answer. They do the quarter. They could do a half if we get some bad numbers. And what they're going to do on Wednesday is just signal what they're going to do, right? They would have to... Canada surprised a few meetings ago and actually cut off all QE, which is what the taper is, cutting it off. Went to QT and raised rates. There's always a chance of that. The question is, will that destroy sentiment? I think they would have. If I'm a Federal Reserve governor, I would have got some comfort out of the market bouncing today. Because it's not... So people misunderstand, I think, that they think the stock market is a way just for rich people to make money. Yes, they did benefit from it. But so did the confidence of the economy in the market. Because what I've always found intriguing with the United States is that people can not be invested in the market at all, complain about those that are, yet look at it as a gauge. It's kind of a strange thing when you think how the percentage that's not in the market, right? But Bernanke and governors since him are aware of that. So keep that in mind of the decision making. I think you got a good read on that, my friend. So as far as employment, labour costs, let me see if this pops out. It may not. Yeah, so the expectation is that employment costs rose again in Q4 after a record jump in Q3. Now remember, a lot of these things are relatively... So when you talk about inflation, it's the change or the delta to the previous period. And this is where politics get into it. So we already know oil's $80, or over 80, whatever. We know natural gas is over $4 BTU. Now, that's not exactly what the consumer pays. But for argument's sake, that's how they judge inflation. So if inflation comes down from these levels and the price change, then they're going to say inflation comes lower. But you're actually still paying those high prices, right? So there is all those factors. And so don't forget, we're coming off very low levels. So Powell and that are very aware of that. And that's what they mean by transitory. But the politicians are now using this as a way to distract. Like everything's a distraction, right, with these guys. And then the sheeple that are on TV, you just listen to CNBC for half a bloody day and you'll get what we're talking about and why I banned it from 14 years now. So all those factors come into decision making. Anyway, we also have central bank decisions this week out of... who do we have? Let me have a quick look, but there's a bunch of countries. It's not just the US. I know it's Canada. So Goldman Sachs, here's what they're saying. So Goldman Sachs, their economist is John Hatzius. He's been there for a while. He's saying that they're going to raise at every meeting from March on to the end of the year. So they're looking at least for 4 raises. That's out of Goldman. We also this week are going to have things that will influence them, like GDP numbers. So they're going to come out and say that we're data dependent. So then every data that is major, the market's going to probably react to till March meeting, right? That's kind of the way I think what's going to happen, unless we have a total rout on the market. That's pretty well it. Anything else? And so just think psychologically how the market reacts to all this.
Nope, we're good.
And so, yeah, the only other chart, and we put it on Traders Community, was the Baltic Exchange. So this didn't get bearish all of a sudden. The reason we look at the BDI, it's one of the charts we look at, is it preempts a lot of this stuff. This thing has been falling. Let me just show you that chart on that article. This thing has been falling for a long time. So you shouldn't have been caught surprised. So be very wary of all these experts that think that this is a new thing, that have been advising to buy the dip, up until it all went to shit. If they're telling you to buy at 4,800 and whatever the equivalent of some of these stocks are, to down here, they're now telling to sell. And a lot of these people pose themselves on things like the Reddits and the FinTwits. Just bear in mind, open your eyes to that sort of stuff. Anyway, here's that chart I wanted to show you, BDI numbers. So look how much this is down. So in 2 weeks, we've fallen 40% on the BDI, right? But look, this didn't just happen. This happened in the end of last year when we were all saying, and back in November, we're saying don't own anything for a reason. It's not Johnny hindsight. We don't know when it's going to fall, but this is telling you what's going on. 5,600 to 1,400, Madavi. Look at that fall. This is all preempted by a lot of factors. And these are factors why the Fed, they're meant to be panicking. Inflation's happened. And like he said, they all miss, because they're seeing stuff like this. This is a supply squeeze. It's also speculators. So down here, we're already way down here on demand. This is freight and shipping. I mean, this is real stuff, real trades, right? And here's some of the factors. So Chinese iron ore imports are down 18% in December, month on month. Futures are gone up in natural gas, iron ore futures, 3 or 4 things off that low base, right? So they're up 3%, but down 18. So we've also got things like massive rains in Brazil. This is stuff you talk about macro, this is the stuff you got to keep your eye on, right? The French steelmaker suspended mining operation. This is all the biggest things that affect freight. Coal, LNG, iron ore, and then we got... So when they go on and on about supply chain issues, look at this. So don't just listen to the talking heads or people that react to stuff really late. That's my little grinding my wheels. We'll be like Peter from Family Guy, have a grinding the wheels segment, mate. What do you think about that? So Johnny got lost in the metaverse, but we did look at everything. Any questions? Feel free to hit us up. And thank you for joining us. Remember to
subscribe.
Hit the like button, smash the like button, as they say. Hit the like button, so make sure you subscribe, and thank you. Welcome all the new subscribers. Share. Tell your friends if you like what it is. I think we do a fairly decent job of what we do. We did a bunch of individual stuff to see if you liked it on the Aussie dollar, the Kiwi dollar, the Canadian dollar, and the S&P. More individualized stuff, trying to explain a little bit of what we see as far as mass, herd, order flow, all that. So you can trade more at the market. So moves like today aren't surprise. So I left this up for a reason, a 5-minute. Look at this real easy reverse head and shoulders or cup and handles, right? So all these things are pretty simple. If you see it, you shouldn't be doing an ego trying to buy the bottom, sell the top. Just try to get the meat out of these markets. Okie doke. Well, everyone, I'll leave you with, what do you always say, mate?
Always be killing it.
Okay, I'll see you.
See you later.
So everyone have a great evening. We'll see you tomorrow. Keep alert. Be wary of these really violent moves. The markets are liquid. There's a lot of people being blown out. There's a lot of people really punting. A lot of averaging. A lot of market makers are out, taking half size off and things like that ahead of the Fed. Okie doke. Have a great evening. Bye now.